Okay, team, I want to get this done for tonight. For those of you who are on the trading floor, and get something up so you can understand today's decisions. What I will say is, obviously, you guys don't need to be trading the same sort of volume size as I am, and risk management and psychology are the keys to really winning in this game. What we're looking at here is a 1 minute chart of the price action on NAS 100, which is not quite the same as the actual NASDAQ, believe it or not. But nevertheless, this is what Vantage present you with, all right? So up here, we've got 1, 2, 3, 4 equal highs in succession. Massive drawn liquidity. I think that's the top part of the Asia session. I think that is the low of the Asia session. I think that there is the London session. So London had a nice little sell-off. But this is the bear chart without, as ICT would say, any lipstick on it. So if we unhide everything, then this will make a little bit more sense, hopefully. So Asia, which is actually the central bank dealing range. So depending on what school of thought you go to, that's either the Asia high or that is. For me, both work sometimes. There's the low and there's the London low. Relevant to these, and why you put this, all this stuff on the chart, right, is time is a massive part of deciding when's a high probability trade. Now today, as for the rest of the week, I'm not overly anxious to get involved in any trading, purely because we have so little news. It's the first week of the month. NFP should be due on Friday. I can't see that being advertised anywhere yet, but nevertheless, it should be. First Friday of every month is always sort of a no trade day or a trade after the news kind of day. So here's what we're looking at coming into New York. As you can see, that macro over there did give that London low, which you would think, looking at that, then there's a good chance of it coming down to take out the Asia low. Now, note that that didn't happen. That's the first thing. 4 equal highs there, London low there, didn't go for the Asia low. Okay, so that's the first scenario that we need to be aware of. Now, you should have done your top-down analysis before every trading session. And when I came into this session, obviously I knew where the key areas were. This box didn't exist, neither did this box, because I hadn't made my mind up whether we were going down or up at this point, or whether we were just going to range sideways, which is a no trade day. You don't want to be traded when it's like this, when there's drop. You want to be traded when you can see a clear move towards a drawn liquidity. Okay, so whether that's a session high or whatever that happens to be, an all-time high, or halfway between a premium or discount array, whether it's a pullback, whatever the situation, you've got to understand A, where price has been, B, where you think it's most likely to go and highly probable, and C, how's it going to get there, right? Those are the three key questions, and those all start from top-down analysis. So coming into this set, none of this lipstick, if you like, existed then. Just case of, all right, we'll have a little look. As usual, I want to do some lives this week. Just to illustrate things for you guys, really, to help you moving forward, and see what happens. So I'm going to play this forward bar by bar and show you what I saw and the way it unfolded with all this in the background, right? Highs, lows, lows, price action. Now, even though this is a bit choppy, you can see we're in an uptrend here. We're in an uptrend here. So overall, this would be an uptrend. This would be pullback. This would be a continued uptrend. Now, the reason New York Open gets as volatile as it does is this is what I've got marked the start of the London session to the end. But in reality, this is 2:30 our time, and this continues till about 4 p.m. our time. So there's an overlap. So you've got London and New York running, which is why when the New York Open injects on its capital, you get the greatest volatility. Now, this week, there's virtually no news. Some people rely on the news to trade off, other people not so much. Okay. But in my case, it's all about price action. If there's news there, it's a bonus. If there is, there is. If there isn't, there isn't. All right. So let's look through this bar by bar. I've set the replay on 0.1, so it should give us the shape of the bars as you play out. Let's find out in a minute. So there's that one in slow motion, just hitting the open, now on this bar, right? So there's your first opening move. So straight away, we've tagged the London low. So that would assume that or indicate that potential exists that we're going to go bearish, which is, not improbable. What tends to happen in New York Open is one day a lot of days, well, it's about 50-50. I say a lot of days, that's not true, right? It'll go one way to fake out, to trap all the settlers. So there's all sell stops, all buy stops behind here. People looking to go back up, all the retail crew. Other times it'll create the first value gap of an impulse drive away and just continue dropping. So both are feasible, but there we've got a drop initially down to the London low, and then we've got a green candle finishing up. Remember, bear in mind, it's only 1 minute candle. So we'll go to the next one, see what the next one does. Now there we've got, if you're on a higher time frame, sort of supply and demand sort of setup, you'd say that, whoa, that looks like it's driving back down, bearish again. But on a 1 minute, it's not as crystal clear. Now there, you've got another one green up. So we've gone down, we're going up. So this becomes a target, right? That becomes a potential target. And that was my first, where my eyes were drawn to in the first place. But in this particular scenario, on this particular day, which is the 6th of this month, then there was no entry, because what my entry model is off the initial bars before we hit macro time, which is the last 10 minutes of the hour and the first 10 minutes of the following hour. Reason being, you get peak volatility. That's why it's a macro. There is no gap as such. Now, if this candle hadn't had such a tail up, that could have created a gap, which would allow me to get in. But then you've got to look at the risk to reward ratio. And from there to there, it's just not really worth it, right? There's no way to have a safe stop loss and get a decent trade in. So next candle pull back. That could have been another opportunity for entry, but you'd have had to be pretty blinking quick if you're going to take it. And again, this candle hasn't created the fair value gap, right? So is that an entry? In my opinion, no, it's not. Not one I'm looking to take, because it's low probability. Even though I'm pretty convinced it's going to go there, it's still low probability. So next candle, up we go, we tag that. Right, so there's the first draw liquidity taken. But as I said in the group chat, there was no entry to actually take the trade there, which is super important. So now, right, we've looked at, this now as a potential second draw liquidity, and it is a strong one because we've got 4 stacked relatively equal highs there, which behind those there's going to be stop losses to go down. So a lot of liquidity. Where's price going? Where's price been? Where's it likely to go, and how is it going to get there? Remember those 3 key questions. Right, so at this point now I still haven't taken any trades, still just watching, all done on live. I did miss the recording, I'm sorry guys. And then we've got next candle, bosh, back down. Now looking at that, that is a potential second entry to even go higher. But I'm not convinced at this point in time. I want to see a couple more rejections. I want to see strength there. And again, we still haven't created the first presented fair value gap. Okay, so here's the next one. No, lucky we didn't enter, isn't it? Now this would indicate that, okay, we've gone that way as a fake out, we've swept the high there, taken all the liquidity, and that's given us enough fuel to drive down for the next target, which is down there, which, if you remember, is the Asia low. Often again a strong draw liquidity. Taking one draw, taking another draw. We've gone bomb, bomb. Are we going to go bomb? Okay. Is there enough there to enter? Bit choppy, like I said, right? This week, as we got so little news, you have to be a little bit cautious. So I wouldn't enter from there because the risk to reward is you'd have to put your stop up here. So the risk to reward would be too great. So let's say we entered there and you entered, you'd have to put a stop about there-ish. So it'd only give you less than a 1.2. So I wouldn't take that just on that basis, right? So next candle. Oh, now again, bear in mind that's a 1 minute candle. That would have been an opportunity to get a better entry, but it happened super quick. So if you could have got in there, right, in theory, that would have been a much better potential entry. For some reason, my entries seem to be getting, I don't seem to be getting the best fills these days. So again, that would have been a 1 to 8.6. You see the difference between that candle and that candle? But in reality, you'd have had to be pretty quick on the trigger up here to get in when that flicked away from that first presented fair value gap. And in all honesty, that is what created the first fair value gap. So you need a 3 candle pattern to even create it. So until that candle is actually closed down here, this doesn't exist. So, okay, so we've missed that one as well. If you miss it, you miss it. Don't worry about it. Pregnant pause here. Sometimes you get consolidation, expansion. What's it going to do? Oh, that candle smashes straight through. Now this then becomes what is called a reclaimed fair value gap, okay, which is slightly different to the normal ones that you guys have seen before. So balanced price range, first fair value gap, balanced price range is when you got sell side, buy side, right? So that's not this one here. That's a slightly different scenario. So bear with a minute. So okay, there's potential now that we haven't gone down to here. So we've created potentially manufactured sell side liquidity down here, right? Because there's a low there, there's a gap to take that, then you go further down here. So again, caution being the word of the day. There's no rush. There's always a next bus around. Now that one I didn't like, right? Because it's created a spike below the first fair value gap. Nevertheless, it's acceptable because price doesn't have to be perfect. But again, do I want to get involved there? Probably not. Now there, I'm really thinking about getting involved again, right? Because we've got some upward momentum now. That has already been taken, so that's the next round liquidity. Right, so that becomes more probable now. Still wasn't in a trade at this point, and then that happened. So if I had gone in anywhere there, that would have taken me out. Realistically, there's a fair value gap there, right? So realistically, you could have been looking at 50% there for a stop loss, which wouldn't mean as great a trade, but still be valid, and maybe a few pips. But in my case, right, I don't like to risk that much too much in risk. That would have taken me out if I had been in. So still wasn't in a trade at this point, and then we got another one below. So we've now had a close below the first presented fair value gap, and this is where it does get a little bit messy. Okay. Now that is a very strong impulse shift to the top. Again, taking out the body of those 2 candles. And I think that's where I did get involved. So I did pull back here. The point being, this is another balanced price range on top of a balanced price range. Okay. And we've got bullish momentum. So, was it this candle or the next one? I think that one. I think I got involved in. So my entry would have been here somewhere. Up and down, done it wrong. Excuse me, guys. My entry would have been. Can't move here. What's this one? Somewhere up there, I think it was. Yeah, up there. Once I seen a spike that back down, I thought, oh, we're going up here. And bosh, we did. No, we smashed that high. And we got two bullish price candles. Balanced price range on top of a balanced price range. That's gone out to sync. That should be there, right? Yeah, the balanced price range is the first fair value gap. So again, this now becomes a reclaimed fair value gap. We've taken the high. We've got no reason to go back down here now because because this has had sell side, buy side, sell side, buy side. So those are all signatures in price. So at this point now, I'm in the trade from, where did I say it was? But roughly about here. I'm picking the wrong one up. I do apologize. Ladies and gents. No, I can't pick it up now. I was in the trade from about there, right? And then just had to sit in this a little bit. Now, I did get out, even though I was expecting that to now be hit, right? I didn't wait all the way till the TP, and I'll tell you why in a second, right? First off, we had a lot of this, to and fro. Second opportunity to enter there, look. Right. At that point, right, you've cleared the high, cleared the high, cleared the high. That draw becomes pretty much locked in most people's minds. Okay. However, don't forget, I said down here, we've got engineered sell side liquidity. So it's well within the capability of NAS to make everybody think it's going to go up there and then crash down. So I think my stop was set, my take profit, I'm sorry, was set around about that level. So when I pulled it back in, obviously this was all done live, and that took me out there, took me out and hit TP. And watch what happens the minute it hits TP. Pull back and then continues to expand higher. Watch this play out. So we've got balanced price range, balanced price range. This became an order block when this smashed through and took the high. And this order block pretty much held the price action there, right? So even at that point there, technically, although I was done, you'd have an opportunity to enter back in to go up here. But being as the draw on liquidity, excuse me, had already been taken, wasn't really an option for me. And that's how it continued to play out. Okay, I'm going to end there. Hopefully it was insightful. Going back to the top-down analysis, this was key. This was key. This was key. This price action on the early part of the fair value gap was very sloppy and could have caught many, many people out. So if it caught you out, don't feel bad. That's just an experience thing. That would have likely caught me out if I'd got one of those, and that's just being honest. But once you can stack the little details of this on top of each other, then you can build up a picture with a higher degree of confidence and smash those wins in. Any questions, guys? Hit me up in the DMs or in the channel.